Hey guys, so today we'll be going over Quantstrat, but if you try to install it, it says it's not available for this version, but there is a workaround. So the first thing we need to do is require DevTools. If you don't have it, then you will have to install it. And then we're going to install it from GitHub. So we're going to need Blotter. Go ahead and enter one for all. So if you get this message from whatever package, we'll go ahead and install that package separately. We'll go back and require DevTools. So now we'll require Blotter. Now we're going to install Quantstrat. Great. So now we'll require Quantstrat. Let's go to the session info from utilities. So these are the packages we're going to need. In addition, we may need other packages, but we'll install those further down the line. All right, so we will be trying to backtest a Bollinger Band strategy. So the first thing I'm going to add are these two lines. I would recommend you running these two lines every time you backtest a strategy because sometimes it'll save the order book or trades into the environments. So this will clear them and make them new again. So we'll start with the dates. I want to run this strategy from 2008 to 2019, 12/31. Next, we're going to place the symbols that we want to call or backtest here. So for these, I'll just put EEM, Spider, and TLT. Next, we need to set the time zone. So the time zone in my area is America. So we'll go ahead and run these. So again, if you're rerunning, you're going to want to also run these first. All right, so now we're going to get the data from get symbols. Formatting with timestamps here. So we'll go ahead and run this line. And we see all of our data here. Great. So I'm going to set the initial date for the backtest. That's 2008, 0101. Starting equity in the account. We'll start off with 2,500. The currency, US dollars. Stock, we'll use symbols. Currency is USD. The multiplier, we'll use 1. So we'll run these lines here. So I'm going to add this line in case you have to rerun this using different assets. This will clear the order book and account info. All right, so we're going to initialize our portfolio. The name, we'll name it Backtest. We'll use symbols. Initialize date is our initial date we used here. Next, we're going to initialize our accounts. Backtest, portfolios, Backtest, initialize date, start date, and the starting equity is init EQ. We're going to initialize orders. So again, portfolio, Backtest, and we need to add our initial date. All right, so we'll run this. Go and name our strategy, events, store, true. We'll run this line here. Now we're going to add indicators. So our strategy, events, name, events from the TTR package. We're gonna list some arguments. So we want the high-low close is equal to high-low close of our market data. Moving average type, we're going to use a simple moving average. I'm going to label it now. We're going to add signals. Events, name, sig, crossover. Arguments is a list. So our columns are equal to close and up. Relationship, we're going to set this equal to GT, which is greater than. And we're going to label this close greater than upper band. So essentially, whenever it crosses the upper band, it'll short, and whenever it crosses the lower Bollinger band, it'll create a long, and we close every time it crosses the middle band. So this takes care of the upper portion, and we're going to add one for the lower band. So I'll just copy this, paste, and I just want to change this to down, relationship, LT, which is lower than, and we'll change this to LT. Now I'm going to add a signal for the middle band. So arguments are going to be the high, the low, and the moving average. Relationship is OP. We'll label this cross mid. We're going to add a couple rules here for B bands, name, rule, signal. Arguments is going to be a list again. Sig val is true. Order quantity. This is the number of shares you want to open when it crosses the upper band. We'll just set this to a generic of -100. Order type, we'll send in the market order. Order side, no. type, enter. So we're going to open every time it crosses the upper band, and we're going to set a quantity order of negative 100 shares at the market price. So now we're going to add one for the bottom band. This should be GT, and this should be LT. Change this to lower band. And we're going to change the quantity to 100 shares. So I'll add in a rule of when to close. And that's when it crosses the mid. Here I'm going to type in all. I want to get rid of all positions at the market. And that will be of an exit type. Alright, so we'll run these. Next, for standard deviations, I'm going to use 2 for the Bollinger Bands and a rolling period of 20 days. So we'll run these. Next, we're going to apply the strategy. E-bands, portfolios is B-band, strat, and our parameters is going to be a list for the standard deviations and the rolling period, which is N. Save it, we'll run it. Now it's doing the back test. It's going to apply the strategy for the tickers in your list. So when it's done doing the transactions for the back test, we're going to update our accounts. We'll start off with the portfolio. We're going to update our accounts. Update our ending equity. So we'll run these. Now I want to take a look at the chart for the trading results. So here we'll put EM, and we want to chart the position, E-band, strat, ticker, and our technical analysis. We want to add B-bands with the rolling period of 20, a standard deviation of 2. So we'll run this. So this is our chart here. So the green arrows are buys and the red arrows are sells. Here's our positions, our cumulative P&L, and our drawdown all in dollars. Now I want to kind of zoom in a little bit, so I'll copy this. And I'll put in dates. I just want to take a look at 2019. So I'll zoom in. Now you can actually kind of see the Bollinger Bands, our positions, drawdowns, and P&L. So it looks like I lost $300 in 2019, and we have a drawdown of approximately $440. So now I'm going to create another portfolio because I want to test and see what the results are if I use a standard deviation of 3 instead of the 2, and then I'm going to compare both to see which one gives me a better result. So here I'll put a remove strat. In case you rerun this, I'll initialize my portfolio. I'm going to name it Backtest 2. I'm going to use the same symbols, same date. So I'm basically keeping everything the same, except I'm just going to change the standard deviation to 3 instead of the 2. So we'll run these lines here. So now I'll change the standard deviation to 3. Copy this line here. And then apply the strategy. Now I'm going to update everything again for the second portfolio. Name this 2. So update. So I'm going to compare the results. I'm going to extract the equity in the first account. I'm going to calculate the returns. I'm going to do the same thing for the second portfolio. I'm going to combine both. I'm going to rename the columns. Now I'm going to plot them. So we use chart, come returns, color set, or legend location, place it top left. Our title will be band standard diff comparison. Our Y label will be cumulative return. I don't want an X label, and we'll go ahead and run this. And here we see the comparisons between the two. By using 2 standard deviations, it's a lot volatile, I guess because it's trading more than using 3 standard deviations. I want to extract the trade stats. So we'll transpose trade stats. So this is what they look like. You can export them and view them later in Excel, or you could always create a text plot here in R. So we'll plot the first 15. We take a closer look and we get our trade stats as an image. We could always export it as a PDF here. You could do the same thing for the rest by changing this to 16 to 30. Here you see the results. You can also extract the order book. So we'll take a look at the order book. And we'll choose SPY. So you get the timestamps, the order price, the order quantity, whether you were long, short, whether it closed, and other pertinent data. Next, I want to extract the equity curves. So we'll use get account, your portfolio. We'll get the last 5. So we'll return this. Let's plot all of these by using lattice. So we'll use XY plot. Summary type H. So now we get a nice figure of everything by time. So here you see from 2008 up to the end of 2019, and you get to see a breakdown of the portfolio. Now I want to extract the equity curve. I'm going to plot it. So now we have a nice visual of our equity curve. Now I want to compare all of the symbols in my portfolio. So here we'll extract the returns from our portfolio, change the column names. I'm going to NA omit and C bind all of my returns. I'm going to rename the last column to total. Here I'm just going to reshuffle the columns. we'll run these, and I'm going to plot it. So here's the equity curve if we were to trade all the symbols and then the individual returns for each. Next, I'm going to make a risk and return chart of each symbol. But first, I'm going to annualize the returns of each asset. Next, I want to calculate the risk. And max return. I'm going to run these here. Finally, I'm going to plot a risk return scatter plot. We see that this symbol here has the best risk return compared to the other two assets here. And again, you can have more symbols and this will look way better. So we'll take a look at our AR tab. So here's the risk and return and the Sharpe ratios of each. Alright guys, so let me know what you think. If you have any comments or suggestions or any questions, just leave them down in the comments and I'll see you in the next video.